to the Funding Agency Podcast, brought to you by Moonshine Capital. I'm your host, Jason Feimster, and today we dive deep into the world of client funding. Whether you're an aspiring entrepreneur, a seasoned business owner, or simply curious about the intricacies of securing capital, this episode is your comprehensive guide. In the world of business funding, it's more than just money. It's the lifeblood that fuels growth, innovation, and success. Understanding the landscape of client funding is crucial, and that's exactly what we're going to explore today. From loans to venture capital, from crowdfunding to alternative funding sources, we'll cover the full spectrum to ensure you have the knowledge and tools to secure the capital your business needs. We'll start by demystifying what client funding is and why it plays a vital role in the business ecosystem. We'll then guide you through accessing your funding needs, preparing your business for funding, and exploring the various options available. We'll also delve into real world case studies showcasing businesses that have successfully navigated the funding process, providing you with valuable insights and actionable advice. So, whether you're looking to start your own funding agency, become a loan broker, or partner with us at Moonshine Capital, this episode is your ultimate guide. Let's embark on this journey together and unlock the secrets of securing capital for your business. Understanding client funding. So, what exactly is client funding? Client funding, a term that might sound complex, is essentially the process through which businesses secure financial support. This support can come in many shapes and forms, from traditional bank loans to more modern methods like crowdfunding. It's a cornerstone for business growth, expansion, and often for turning innovative ideas into reality. At the heart of client funding is the need for financial resources to turn business potential into business success, be it to start a new venture, expand existing operations, or innovate within your market. Adequate funding is often the key to making these ambitions achievable. It's not just about having money, it's about having the financial backing to realize your business visions. In the realm of client funding, there are several avenues to explore. Loans, for instance, are a familiar route, offering both secured and unsecured options. Then we have venture capital, which is more than just money. It's a partnership with investors who believe in the future of your business. And let's not forget about crowdfunding, a modern approach that not only raises funds, but also builds community support. Each of these funding types serves a unique purpose and suits different stages of business growth. The art lies in matching your business needs and goals with the appropriate funding source. This alignment is crucial for not only securing funds, but also for setting your business on a path of sustainable growth and success. Understanding your funding options is just the first step. As we move forward, we'll explore how to assess your business's funding needs accurately. It's about more than just figuring out how much money you need. It's about preparing your business to be an appealing candidate for funding. This preparation is key to unlocking the doors to financial support and business growth. Accessing your funding needs is a crucial step in the journey to secure capital. It's not just about a number, it's about understanding the financial requirements of your business at a deeper level. This understanding forms the foundation of your funding strategy and shapes the direction of your search for capital. So, how do you determine the right amount of funding for your business? The first step is to develop a detailed business plan. This plan should outline your business model, market analysis, revenue projections, and detailed financial forecasts. It's your roadmap, showing not only where you want to go, but also how you plan to get there financially. A well crafted business plan doesn't just serve as a guide for you, it's a tool to communicate your vision and potential lenders or investors. Equally important is understanding the purpose of the funding. Are you looking to cover startup costs, finance an expansion, or bridge a gap in cash flow? The purpose of the funding will not only help determine the amount you need, but also the type of funding that is most suitable to your business. For instance, a short term cash flow gap might be best addressed with a line of credit, while long term expansion plans might require a more substantial loan or equity investment. Another key aspect is financial projections. These projections should include income statements, cash flow forecasts, and balance sheet for at least the next 3 years to 5 years. They provide a window into the future of your business, showing you how you expect it to perform financially and how the funding will help drive that performance. Remember, investors and lenders are not just investing in your business as it is today, they are investing in its potential for growth and profitability. In this segment, we have explored the importance of thoroughly assessing your funding needs. Understanding the nuances of your financial requirements is not just about securing funding, it's about securing the right kind of funding that aligns with your business goals and growth trajectory. Up next, we'll delve into preparing your business for funding, a step that can significantly enhance your chances of securing the capital you need. Preparing your business for funding is a critical phase in your financial journey. This process involves more than just having a solid business plan and financial projections. It's about positioning your business as an attractive investment or loan prospect. There are several key areas to focus on to enhance your chances of securing funding. Firstly, let's talk about the importance of your credit score and financial history. For most lenders and investors, these are indicators of your financial responsibility and stability. Ensure that your business credit reports are accurate and up to date. If there are any discrepancies, address them promptly. If your business is relatively new and doesn't have a substantial credit history, your personal credit score may also be taken into consideration. It's crucial to maintain a healthy credit score by managing debts effectively and making timely payments. Next, we delve into another realm of collateral. Collateral can significantly bolster your loan application. It provides lenders with a form of security, reducing their risk in case of loan default. Access your assets carefully and understand what you can offer as collateral. However, be mindful of the risk involved. Pledging assets means you could lose them if you're unable to repay the loan. Now let's discuss your business's financial health. This isn't just about profitability, it's about demonstrating effective financial management. Lenders and investors will look at your cash flow statements to understand how well you manage incoming and outgoing funds. A consistent flat cash flow indicates a stable business, making it a more attractive funding prospect. It's also essential to have a handle on your expenses. Reducing unnecessary costs can improve your bottom line and show potential funders that you're prudent and efficient. Furthermore, having a strong management team is a critical component. Investors, in particular, often invest in people as much as they invest in ideas. They look for teams that have experience, skills, and the drive to turn a business plan into a successful enterprise. Ensure that your team's expertise and commitment are evident in your business proposal. Finally, legal and tax compliance cannot be overlooked. Ensuring your business is in good legal standing and compliant with all relevant tax laws is paramount. This not only avoids potential legal pitfalls, but also builds credibility with potential funders. As we wrap up this segment on preparing for funding, remember that this preparation is not just about making your business look good on paper, it's about building a solid foundation that will not only attract funding, but also support the sustainable growth of your business. Exploring loan options. In this segment, we're diving into the diverse world of loan options available to businesses. Understanding the different types of loans and their unique features is key to selecting the right one for your business needs. Let's explore some of the most common and effective loan options. First on our list are small business administration loans. The SBA offers a variety of loan programs designed to assist small businesses. These loans are known for their favorable terms, including lower down payments, flexible overhead requirements, and no collateral for some loans. The SBA doesn't lend money directly, but guarantees loans made by participating lending institutions. This guarantee reduces the risk for lenders, making it easier for businesses to get approved. Next, we have traditional bank loans. These are typically offered by commercial banks and are among the most common sources of business funding. Bank loans can offer competitive interest rates and various term lengths, but they often require a strong credit history and substantial collateral. The application process can be rigorous, but successfully securing a bank loan can provide substantial financial boost to your business. Online lenders are another option, especially for businesses that may not qualify for traditional bank loans. These lenders often have more lenient approval criteria and a faster application process. However, it's important to be aware that they might also have higher interest rates and shorter repayment terms. Online loans can be a good option for quick funding needs or for businesses with less established credit histories. Additionally, there are specific types of loans tailored to particular business needs. For example, equipment financing loans are designed for businesses needing to purchase or lease equipment. These loans typically use the equipment itself as collateral, potentially making them easier to qualify for. There are also merchant cash advances, which are more suitable for businesses with high credit card sales. They provide quick access to funds with repayments made through a percentage of daily credit card sales. Each of these loan options come with its own set of advantages and disadvantages. The key is to match the loan type with your business's financial situation, growth objectives, and funding requirements. Consider factors like the loan amount, repayment terms, interest rates, and any additional fees when making your decision. As we conclude this segment on exploring loan options, remember that choosing the right loan is a strategic decision. It's about finding a balance between immediate financial needs and long term business goals. Venture capital and angel investors. Venture capital and angel investing are two pivotal aspects of business funding, especially for startups and growth stage companies. In this segment, we'll delve into what these forms of investment entail and how to navigate them effectively. Venture capital, VC, is a type of private equity provided by firms or funds to small, early stage, emerging companies that are deemed to have high growth potential. VCs are not just investors, they are partners in your business. They bring in substantial amounts of capital, industry expertise, and valuable networks. However, in exchange for their investment, VCs typically require a portion of equity in your company. This means you'll be sharing ownership and, to some extent, control of your business. On the other hand, angel investors are high net worth individuals who provide financial backing for small startups or entrepreneurs, often in exchange for ownership equity in the company. Angel investing is generally seen as an earlier stage than VC funding and involves lower amounts of capital. These investors are often entrepreneurs themselves or retired business executives who invest in businesses out of interest, belief in the idea, or for potential returns. So, how do you attract venture capitalists or angel investors? It starts with a compelling pitch. This is your opportunity to tell your business's story, showcasing your vision, your team, your market potential, and your financial. Be prepared to demonstrate not only why your business is a good investment, but also how it aligns with the investor's interest and portfolio. Investors look for scalable businesses with a clear competitive edge and a strong management team. They want to see that you have a well thought out plan for growth and a realistic pathway to profitability. Your pitch should be backed by robust data, market analysis, and a clear understanding of your industry dynamics. It is also about building relationships. Networking plays a crucial role in the world of venture capital and angel investing. Attend industry events, startup meetups, and other gatherings where you can meet potential investors. Be proactive in seeking introductions and be prepared to pitch your business at any moment. As we wrap up this segment on venture capital and angel investors, remember that these forms of funding are more than just mere financial projections. They are partnerships that can provide invaluable resources, mentorship, and strategic guidance to help you scale your business. Crowdfunding and alternative funding. Crowdfunding and alternative funding options have become increasingly popular, offering a different route for businesses to raise capital. In this segment, we're going to explore these modern funding avenues and how they can benefit your business. Crowdfunding is a method of raising capital through the collective effort of friends, family, customers, and individual investors. This approach taps into the collective efforts of a large pool of individuals, primarily online, via social media and crowdfunding platforms. There are various types of crowdfunding, including reward based, equity based, and donation based crowdfunding. Platforms like Kickstarter and Indiegogo are popular for product based projects, where backers are often offered a product or special perks in return for their contribution. The advantage of crowdfunding is not just in the funding, but also in market validation and customer engagement. It's a great way to test the market's response to your product or business concept before fully launching. However, a successful crowdfunding campaign requires an effective marketing strategy and a compelling story to engage potential backers. Beyond crowdfunding, there are several other alternative funding options. These include grants, which are sums of money given to businesses, typically for specific projects or purposes. Grants are often provided by governments, foundations, or trusts and don't need to be repaid. However, they can be highly competitive and often have strict criteria. Another alternative is peer to peer lending, where individuals lend money to other individuals or businesses through online platforms. This can be a quicker and more flexible way to secure funding, as it bypasses traditional financial institutions. Lastly, we have commonly community development finance institutions, or CDFIs. These are private financial institutions dedicated to delivering responsible, affordable lending to help low income, low wealth, and other disadvantaged people and communities join the economic mainstream. Each of these alternative funding options has its own merits and challenges. When considering these routes, it's important to understand the terms, level of involvement required from you, and the potential impact on your business. As we conclude the segment on crowdfunding and alternative funding, remember that these methods are more than just ways to raise capital. They can be powerful tools for building community, testing your product, gaining valuable insights into your market. Application and negotiation processes. Securing funding for your business involves more than just identifying the right source of capital. It's also about navigating the application process effectively and negotiating terms that are favorable to both you and the funder. In this segment, we'll explore the key aspects of these crucial steps. When it comes to the application process, whether for a loan, venture capital, or any other form of funding, preparation is key. Start by gathering all the necessary documentation. This typically includes your business plan, financial statements, cash flow projections, personal and business credit reports, and legal documents related to your business. Ensure that these documents are thorough, up to date, and accurately reflect your business's current state and future potential. In many cases, you'll also need to fill out specific application forms provided by the lender or investor. Pay close attention to the details in these forms. Be precise, clear, and honest in your responses. Any discrepancies or inconsistencies between your application and supporting documents can raise red flags and potentially derail your funding efforts. Now let's talk about negotiation. Once a funder shows interest in your business and negotiation begins, it's important to go into these negotiations with a clear understanding of what you need and what you're willing to offer in return. If it's a loan, this might involve negotiating the interest rate, repayment terms, and any collateral requirements. For equity investments, the negotiation will focus on the valuation of your business and the percentage of ownership the investor will receive. Remember, negotiation is a two-way street. It's not just about getting the best deal for yourself. It's about finding a mutually beneficial agreement. Be prepared to make concessions, but also know your limits. It's crucial to understand the long-term implications of the terms you agree to, especially when giving up equity in your business. One final piece of advice: don't rush. Take your time to review all the terms and conditions, and don't hesitate to seek legal or financial advice if needed. This is a crucial decision of your business, and it's important to get it right. As we wrap up this segment on the application and negotiation processes, keep in mind that these are steps are your gateway to securing funding your business needs. They require preparation, attention to detail, and a strategic approach. Case studies and success stories. Understanding the theory and processes behind securing funding is crucial, but sometimes the most powerful lessons come from real world examples. In this segment, we're going to look at case studies and success stories of businesses that have successfully navigated the funding process. These stories not only inspire, but also offer practical insights and lessons learned. First, Let's consider the story of a tech startup that secured venture capital funding. This company began with a groundbreaking idea for a new software platform. Initially, the founders bootstrapped the business, using personal savings to get it off the ground. As they built a prototype and gained some traction, they realized they needed more capital to scale. They crafted a compelling pitch, focusing on their unique value proposition, market potential, and scalable business model. After several rounds of meetings and negotiations, they secured a substantial investment from a venture capital firm. The key takeaway here is the importance of a solid pitch and the ability to demonstrate scalable growth potential to attract venture capital. Another success story comes from a small family owned restaurant seeking to expand. They opted for traditional bank loans. The owners carefully prepared their application, providing detailed financial records and a solid business plan outlining the potential for growth and profitability. They also demonstrated their history of steady cash flow and strong community presence. Their thorough preparation and strong business foundation convinced the bank to approve their loan, enabling them to successfully expand their business. This example highlights the significance of detailed preparation and a strong track record in securing traditional bank loans. Our third case involves a creative project that turned to crowdfunding. The project was a novel concept for a sustainable product. The creators used a crowdfunding platform to not only raise funds but also gauge market interest. They created an engaging campaign with a compelling storytelling, attractive rewards for backers, and regular updates. The campaign was a hit, exceeding its funding goal and establishing a robust customer base even before the product launched. The success story underscores the power of storytelling and community engagement in crowdfunding campaigns. These case stories illustrate the diverse paths businesses can take in securing funding. They demonstrate the importance of preparation, understanding your audience, and tailoring your approach to the specific type of funding you're pursuing. As we move forward, remember that each funding type is a journey and is unique, and your approach should align with your business specific needs and goals. Partnering with Moonshine Capital. In our final segment today, we're going to explore how partnering with Moonshine Capital can be a game changer in your quest for securing funding. As the CEO of Moonshine Capital, I've seen firsthand how the right guidance and support can make a monumental difference for businesses at every stage of their funding journey. Moonshine Capital specializes in helping entrepreneurs and business owners navigate the complex landscape of funding. We understand that each business is unique, and so are its funding needs. That's why we offer personalized services tailored to your specific funding goals and circumstances. Whether you're just starting out and need seed funding, looking to expand and require substantial advancement, or anywhere in between, we're here to assist. Our team brings a wealth of experience and a diverse network of contacts in the finance industry. This includes connections with banks, venture capitalists, angel investors, and alternative funding sources. By partnering with us, you gain access to this extensive network, increasing your chances of finding the right funding for your business. But it's not just about finding funding, we also focus on preparing you for success. This includes assistance in developing a compelling business plan, crafting a pitch or presentations, and providing guidance on financial projections and business strategy. Our aim is to ensure that when you approach potential funders, your business is presented in the best possible light. Additionally, we offer support in the negotiation process. Securing funding is often just the beginning. The terms of the funding, be it a loan agreement or an equity investment, can have long term implications on your business. We help you understand these terms and negotiate arrangements that are favorable and sustainable for your business's future. Finally, Moonshine Capital is committed to building lasting relationships with our clients. We're not just a one time service, we're your ongoing partners in growth. As your business evolves, we'll be there to offer support, advice, and access further funding opportunities. As we wrap up today's episode of The Funding Agency, let's take a moment to reflect on the journey we've embarked on together. We've navigated the intricate world of client funding, delved into accessing your funding needs, and explored how to prepare your business for funding. We've examined various loan options, understood the dynamics of venture capital and angel investors, and looked at the innovative avenues of crowdfunding and alternative funding. Additionally, we've learned through real life case studies and discussed the unique advantages of partnering with Moonshine Capital. Securing funding for your business is more than just a financial endeavor. It's a strategic journey that shapes the future of your enterprise. Whether you're at the seed stage of a startup or looking to scale an established business, insights and strategies we've shared today are designed to guide and empower you. Remember, funding is not just about capital, it's about the opportunities it creates. It's the fuel for growth, innovation, and the realization of your business dreams. The path to securing funding may have its challenges, but with the right preparation, strategy, and partners, it's a path that can lead to extraordinary success. Thank you for joining me, Jason Feimster, on the Funding Agency Podcast. It's been a pleasure to share this knowledge and these insights with you. We at Moonshine Capital are committed to supporting your funding journey and helping you achieve your business goals. Stay tuned for more episodes where we'll continue to unravel the secrets of the funding world and provide you the tools to succeed. Until next time, keep striving, keep growing, and remember, the right funding can turn your business vision into reality. Here's to your success.